Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elcon, along with Brianna Valesky, and we have Maz Jadallah on the line. He's the CEO of AlphaClone. Maz, how you doing on this Thursday morning?
I'm doing fantastic. Thanks for having me on, Joel.
All right. Before we get started, just real quickly, tell us about what 13F filings are for people that aren't that all familiar with them.
Sure. If you're an institutional investor in the United States managing $100 million or more of other people's money, the SEC says you have to file Form 13F HR every quarter. And that form discloses all of your long positions at the end of the quarter, every single one.
Okay, all right, and we keep a close eye on here. Who are some of the big boys that, I know you follow all of them, but obviously you have, Icon, Ackman, besides, some of the big ones, there's some that, maybe aren't as well known, but, have pretty good calls in the market.
Yeah, so as you know, hedge funds are sort of like a cult of personality, and certainly they're the guys who attract a lot of the media attention, like Icon and Ackman. And there's some lesser-known guys that do really well. Seth Klarman gets quite a bit of press, but not quite as much as Ackman. But he's also a great guy to follow. Monish Pabrai is also a great guy to follow, great value investor. But the point is that people end up sort of selecting investors based on their reputation and brand. And what AlphaClone has done is really automated the process of evaluating these managers, all of them. And we track over 500 managers today. And so we've automated the process of evaluating them based on their disclosures. And these 13Fs can really be a valuable tool to evaluate the manager's true stock selection skill, because the disclosures allow us to strip away the manager's potential use of things like leverage and market timing to generate performance. As you know, there could be many sources of performance for a manager's actual returns. But evaluating them through their 13F filings allows us to strip away all sources except for one, and that is stock selection skill. We call that process a clone score, and we choose managers who have the highest clone score and then aggregate their highest conviction ideas into one portfolio. And all of our strategies operate on that principle. One other thing that's really important, also related to sort of cult of personality, is people sort of fall in love with the managers that they choose. But because we have a very rules-based, automated approach to evaluate them, we can reevaluate them, and we do every 6 months. So we never fall in love with the managers that have high scores, because sometimes managers who end up having high scores end up doing poorly going forward, or their score starts to go down, and so we can switch out of managers whose scores are decreasing and switch them in managers whose scores are going up. So
before we talk about the ETF, the AlphaClone Alta ETF, I just one example, I just can't get this out of my mind. Icon Enterprises, at one point, and this was at the end of 2012, everyone wanted to be like Carl here, and they took that thing up to 150. Do you remember that at the end of 2013? And if you talk about a turn in the market here, this thing has been overcut in half. I know the net asset value was much lower at that time here. Is this just a prime example of people are chasing money and chasing these managers, and they just end up getting destroyed?
Exactly. I think that's a perfect example. People, managers do well, and then they don't do well. It's very rare that a manager will do well in every single environment over a long period of time. And that's been what we call the choice dilemma for investors, by the way. And it doesn't just happen with active managers. Whether it's stocks or ETFs or mutual funds or hedge funds, there are thousands and thousands of products out there. And investors end up chasing performance regardless of what vehicle you're using to invest. And that's the problem that we're trying to solve for the long-term investor through this sort of continuous evaluation and selection process. So.
Okay, so you do have your ETF here, the Alpha Clone Alternative Alpha ETF here. So tell me how the strategies, from like other ETFs, and then you have Alpha, how are you challenging active, mutual, and hedge funds?
Yeah, so in a couple of ways. I think first the ETF structure is a fantastic structure for investors, and it's a superior structure over mutual funds and hedge funds. It's lower fee relative to those vehicles. It's more transparent, and that's really important because the transparency allows investors to evaluate the true sources of returns around the vehicle. As opposed to in mutual funds or hedge funds, it can be very opaque to understand exactly where the sources of returns are coming from. The ETF vehicle is also very accessible, and it's very tax efficient, much more tax efficient than mutual funds and hedge funds. That discussion could get technical, but trust me, it's one of the most tax efficient vehicles out there today.
All right, so now, taking a look at all this very important data here, you must form some kind of market outlook here. I guess the last major reports you had were in mid-August here. What kind of sense did you get from those 13F filings?
Yeah, a couple of things there, Joel, and both are not good. A unique feature of our strategies is that we have a built-in hedge into our ETF, our Alpha ETF, and we don't believe in being long only all the time. We certainly don't believe in being long short all the time. So the strategy can vary from being long only to market hedged or market neutral. And whether it's long only or market neutral is based on a technical trigger. Well, for the first time in 3 years, that technical trigger happened at the end of August. And so our strategy now is market neutral, S&P 500 neutral. And so obviously, we're coming into a bearish sort of time in the market. The other thing I would say is that the allocations that we've seen, quote unquote hedge funds and institutional investors allocate into in terms of sectors are some of the bearish I've seen since we started doing this. You're seeing huge overweights in healthcare and underweights in financial and energy stocks. And technology stocks. And, I don't think I've ever seen an underweight in the technology sector in our strategies, but that happened at the last rebalance. So whether you're looking at sort of overall, the bearish cycle in the market or sector allocations, I would say things are quite bearish.
And so what you're saying is that these beaten down sectors like energy and commodities, a lot of times, people are out there looking for bargains. But from what you're seeing in the 13F filings, the big boys just aren't nibbling yet, huh?
Not yet. I mean, we don't see them coming into these sort of beaten down sectors, and there's certainly quite a few of them with conviction yet. So I think it's wait and see from here.
Okay, and I'm looking at the overall performance here of the Alpha Core ETF, and debuted here in 2012. We've had a nice rally in the overall markets, and peaked just like the rest of the market here, and I see the little bit of hit it took on the flash crash here. Do you think that this, the way you're looking at things, the way you're taking a balanced approach to the market, that this will be able to perform in a stealth bear market as well as a grinding bull market?
Right. We do, simply because we're really well hedged now, and we'll stay hedged until the S&P 500 closes above its 200-day moving average at any month end. So that dynamic hedge increases the probability that we are well aligned with the market, whatever the market's doing over a multi-month period. So if the market's running over multiple months, there's a very high likelihood that we'll be long only, and we've shown that our horses can run faster than the market during those times. And when the market's selling off over multiple months, there's a very high likelihood, like this month, that we'll be well hedged.
What do you use for, if you mind revealing, what do you use for your hedges? Do you use
Yeah,
some of the ETFs, the futures?
absolutely.
What do you
So we
use?
short SPY. So we had a little under $200 million in the fund at the end of August. So in early September, we borrowed the same amount of SPY and shorted it.
Okay.
So
So
yeah.
what JM in the chat, looks at other sites like this, and he wants to know what makes you guys a better site than something like InsiderMonkey.com.
Yeah, it's simple. For us, it's all about our clone score process and the methodology around portfolio construction. And we are the first to actually productize our research into investable strategies, whether they're in separately managed accounts or ETFs. And our track record speaks for itself.
All right, and do you look? I mean, when you get some signals and stuff, do you pay any attention to the technicals or fundamentals, or put any of your own twist on it, or do you just let?
No, we're completely rules based, 100%. The machines, we build the alcos, and the machines evaluate the managers. But we do leverage human capital, not only our own because we built the algorithms, but we're following human beings that file these 13F forms. So what we're doing is really combining the best of man and machine. We're combining the best of active and passive investment into one product.
Spice in the chat here, it says you have a small dividend of 0.01%. Do you any plans on increasing the yield on that besides the price going lower?
No, we're not focused on dividends on our initial products. We may in the future launch an index that's sort of dividend focused, but that's not a focus of ours now.
Okay, and I see that it's kind of lightly traded here on that flash crash day here when you went down to 33 even. Was there any really plausible explanation for that besides just illiquidity in the markets?
Yeah, it wasn't even really liquidity. It's an issue that all ETFs sort of have to deal with on the market opens. It has to do with how the market maker is setting the price on the ETFs, whether it's ours or anyone else's at the open. So if you look at a lot of ETFs on that day, you'll see a wide trading range. It's just a function of how the market makers handle ETFs.
Okay, and we're basically in a buyer long bias market here. For good reason, since we've had the overall trend since the financial crisis here. Is there anything that you're seeing in the 13F filings that would make you think that we've seen maybe a long term top here in the market?
No, it's difficult to use 13Fs to make that level of
Okay.
specificity on calls in terms of where the market is. I can just tell you that the sentiment is very conservative right now, based on what we're seeing. Now that could change, right, as things sort of, shake out and resolve, both globally and here in the U.S. And we're still in a worldwide economic recovery, and that means that there are going to be ups and downs in stock markets, both here and abroad. But calling a top, I'm not that brave.
Okay. Is there any tweaking that goes on in between the 13F filings, or do you strictly wait for that information to
No,
come? No, nothing, huh? File.
nothing. It's 100% rules based. I mean, one of the things that our approach really does insulate the investor against is behavioral risks, including our own, not only theirs, but our behavioral risks. Being 100% rules based means that you sort of religiously follow the rules. There's no tweaking. I can't express my opinion about how I feel on Greece or China or anything in the strategy. The strategy is 100% insulated, self-driving from behavioral risk, and those are the risks that really trip up most investors. That doesn't get talked about really as often as it should.
No, I like your confidence and your focus here, and you're following the rules. If you do that consistently with your back testing, then it should prove out in the markets. We've been on the line with Maz Jadallah. He's the CEO of AlphaClone, and AlphaClone aggregates 13F filings and tries to figure out what the big managers and the big money are doing in the markets, and he puts it to work in his ETF, ALFA. Maz, great information. Thanks a lot. We hope to talk to you again soon.
Thanks, Joel. Have a good one.